Hello guys, once again I welcome you back. I'm so glad that you're watching. So today we are going to be talking about, I'm going to be sharing uh, information on how to use moving averages, how to properly use moving averages like a pro. But we are going to be basing on the concepts of the based on the BTMM strategy or beat the market maker strategy. So I'm not going to be teaching the BTMM. Yeah, for that, if you want a personal touch on BTMM, you can go. There is a Telegram channel. You can search it. It's called, I think, BTMM content. There's some useful material over there. Or if you want a personal touch one-on-one, yeah, you can check out in the description. So basically, I'm going to be explaining moving averages in general. You get, but we are going to be using a lot of concepts that Steve Mauro talked about. So why do I love BTMM? By the way, this was the first proper strategy that I learned, and it really helped me a lot. These guys, there is ICT, there is SMC, which is more or less ICT, and others, patterns, what were those strategies. One thing that I know about them, there is something that consistent they provide. You get? So any strategy is good. In strategy is good. So you can go in details. There are those people who draw triangles and they can, let's say, price is moving like this, and then someone it's going to break up, and that is a strategy. You get? But a good strategy, it's not just a mere one video. That's what I always say. Much as many of our titles we put, let's say, best moving average what strategy, but normally we don't go in detail. But yeah, that's the fact. That's the fact. So I want to be clear on certain things. I don't want to hype you guys. This channel, I receive uh few viewers, which is okay, but when I make an impact on someone, I feel so good. And then for that reason, if at all you've been here more than once and if you've ever picked anything, please, you can just motivate me by liking the video. And you can also share it, you can subscribe, but you like at least in case it's good, because it's one of the reasons that I'm not uploading regularly, for sure. Because in the analytics I see many of you watch, you don't like, and then you come back. So that's why I also hold back after all. So now let's go to BTMM and indicators in general. So it uses exponential moving averages. As you can see, these are the moving averages as we can see. BTMM, though I'm going to explain when, even if you're using SMAs, what, and then actually it has, I've not written them, but now let me quickly talk about them. The purple one, it is the 800. You get? Now it is the 800. It is in color purple. Now we have actually this one is called the I'm forgetting its name. Anyway, we have the mayonnaise or the mayo, which is the white one. It is period 200. The purple one, it is period 800. And then the white one, it's exponential moving average. And then the blue one, the blueberry, it's the 50 period. And then we have the 13. The 13 is the 13 is the 13 is the one in red. It's the ketchup. Yes, I think it's the ketchup. And then the yellow one. They are all important. You get? And then yes, there are those. But now let me first give, because this is an introduction. By the way, for sure, if you like this video, if you enjoy this video, please like, because I'm going to base on that for me to make the next video. Trust me, you guys. But now, there is something in common about these moving averages, and actually, you should take a keen note. Why am I bringing out this? I want you to be careful when you're combining indicators. You have to have a purpose. Don't just change indicator values. By the way, even me, you know that I can just modify indicator values and then I come and make a video. So it is possible. But this strategy, you can see that this guy really put in time. They have something, they're all exponential moving averages. Number two, they have a ratio of 1 to 4. Now, a ratio of 1 to 4, by that I mean when you divide, let's say, let me, let's get a calculator. So in case you divide 5, divide by, no. When you come to 13, divide by 5, 13 divide by 5, you get 2.6. So these ones, the 13, the 5 is not so important by the for it is just showing us the patterns, because Steve talks of the patterns, the M's and all that. So that's the main purpose. But the major ones, if you divide 50 by 3, if you get 50, exponential divide by 13, you'll forgive me guys, sometimes I get off track. You get 3.84, but when you round off, you get 4. Then when you go 200, because the next in line is 200, divide by 50. Divide by 50, you get 4. So, and when you get 800, divide by 200, you get 4. So there is something common, and we also have trading sessions. There's a reason for that. At least we're looking at the similarities. They're all exponential. They have a ratio of 1 to 4. So there is a lot. But now let me give you a trick about moving averages. Now, when you talk of moving averages, it is like, you guys, if at all you've gone to school and then you did some maths, we used to plot graphs. And then, by the way, these candles that you're seeing here, this is like a graph. So the information here can be plotted. So now, when you are plotting, sometimes we used to have that is the y and the x-axis. So you can plot values. We can plot values. Let's say we have this is what I want. So we have something, let's say, that is moving like that. So I'm going to do it like this. So you're plotting there. But what are we plotting? We are plotting a moving average against, we are using a moving average because the moving average is moving and price is also moving. So we are seeing these candles and then we are seeing these moving averages. So now, how does price move? The price moves like this. If at all it's a downward trend, and then it goes back up, because this is how the market, it makes corrections. And I told you, when you're trading, you have to know the cycle where you are, whether you're taking a retracement or you're taking an impulse. So then it turns like that, and then it moves up like that. So that's how they really work. What do you notice about here? It's unfortunate that I cannot get feedback from you right now. But what do you notice? It is that, if at all you get whichever moving average that you're using, trust me, even if you put the 30 period exponential moving average, it will have a relevance to price. The 30 period, it will have a relevance to price. But now you have to wait, which means if at all we were coming down, the market normally bounces off that moving average. It bounces off. It bounces off. And now when we change, we get a retracement to that moving average. So where is the catch? I told you in SMC, in the videos that I've shared about SMC, I was telling you guys that the market maker, this is a game of someone is bringing in money to move the market. That's why during areas of low volume, if at all it was on M15, areas or times of low volume, when there is no volume or where there is little money, like during the Asian session or late New York session, you find that the market barely moves. It barely moves. It is just there, like it can barely move in a given direction. So market makers are good. They are good because they can make these impulse moves. They have the money to make these impulse moves. But now, given that they bring in capital to move and make these impulse moves, what do they do? Like, how do they come in business to make money? So now, where is the catch? Most people, when price crosses, when price crosses, they take entries and now they come for them. for them, they come and hit stops. You get? They come and hit stops. So you have to be careful. That's why if really the market has turned, you wait for a retracement. I've given you this catch. You get? Now, for that reason, if you're combining, that's why I'm laying ground for this BTMM content by the way, because this episode is going to be really important. Now, what if, what if, let me first delete that. What if we had another moving average of a different period? You get? So let's say the moving averages cross like that. Is that not what we normally do? We normally combine sometimes these moving averages. You get? We combine them. Yes, they are all sloping at this point and then they all turn. Now, no matter the period, even if you put the 113 period moving average, it is going to have a relevance to price, and I'm going to demonstrate that. What do we expect? If at all this is the market behavior, you have to know the behavior of the market. If that is the behavior, and then you turn like this, you get? Let's say the market starts to turn like that, you get? It means if at all we get a retest to that moving average, time comes when we shall get a deeper retracement to that move, like more so to the last one, you get? And then we continue. Let me first explain that point because it's a hard one. Even me within myself, I feel it's not very clear. On a single moving average, actually let me first put two graphs that you can see. You get? So if at all it's one moving average like this, if at all it's one moving average like that, and now price is falling, it is making retests to that moving average, and then it turns, we get a retracement to the moving average, and then we take entries. Others here they catch early buyers, they come and hit their stops before they move up. Now we've gotten a retracement to this. You get? We've gotten a retracement to that. So now what do we normally see for if at all we've combined the two? You get? I don't know, you get this principle very well. You can ask in the comments if at all you've not understood it well. It means that when these two cross, you get? When these two cross, what do people do? They take entries. You get? But the market maker, this has been seen by everyone. I told you, whenever something is visible to everyone, you be careful or get skeptical. You get? You be careful or you get, because they cannot make money if it's something that is visible to everyone. Everyone is seeing a cross here and they know price has moved up. Now, here they catch early buyers who buy crosses. So for you, wait for a retracement to that. But normally the market comes and it makes a deeper retracement to the other moving average. So this is not a reversal. This one becomes a complex pullback. That's what I normally call it, because personally these days I combine a lot of ICT and then BTMM. You get? So you get a deeper retracement to that. You get? So for now, we are going to let me first go on the charts and then no, let me go to MT. And by the way, it can also work for synthetic indices. This is volatility 75. I realized you guys in the videos where I mentioned volatility 75, that's when you watch. Yet it is a concept. If I give it a concept in Forex or what, like, it works. It is applicable on both sides, but it seems people are only interested in synthetics. So they work. Though for synthetics, I think you may need some personal guidance, though you can learn. Let me come here. Now, this is weird. Let me go to Euro USD on H1. Yes. So this is what I was trying to explain. Though here I've been explaining a case example for only two moving averages, but it means the concept that I've been trying to explain, that I wanted to explain. If at all you combine 1, 2, 3 moving averages, let's say you have like 5 moving averages, you get, it means that here they cross, you get a retracement to the moving averages here. This is the opportunity for you to take entries, then you sell. Then there is that moment normally when the market seems to turn. You get, when the market seems to turn, it is not coming back up. You get, it is not coming back up. No, it is making a deeper retracement. And now for BTMM, normally we get a deeper retracement to the 200 period, or sometimes the 50, depending on the time frame. The 200, or even this one, the blue one, the 800. You get? So anyways, for now I'm going to make another episode, but I will only make it if at all I get some good reaction. So if you've seen that I'm speaking some sense, please, you like the video. I'm most interested in you guys liking the video. And then if you're propelled, you can be part of the journey, and then you subscribe. Trust me, you guys, if at all I get positive reactions, I will be making videos every day. And then if you want a personal touch or personal guidance, and for personal guidance, I combine SMC or ICT and then BTMM. You get? So you can also check out the link in the description, and you text me on Telegram. For now, I wish you the best. Keep learning.